Hi, I'm great.
Hi, I'm so sorry about that. Can we carry on?
Yes.
Okay, great. So now we are doing our, what is it again? Our income tax paid, right?
Yes.
So remember I asked you that to take a few notes before we start with our calculation. So please just note this down. Because, I just showed you that we have SARS income tax under trade and other receivables and SARS
can
income tax.
I charge?
Oh, no problem. No problem. I'll wait for you.
All right. Yes, I'm done.
Okay, great. So remember, we said we have SARS income tax under trade and other receivables and SARS income tax under trade and other payables. And I asked you to scratch those out when we were working with trade and other receivables and trade and other payables.
Yes.
So we removed them because they have their own note, which is the one we are dealing with now, right?
Yes.
So please just note this, that if my trade and other, my opening balance, so my opening balance is the one that's on the right, the 2010, this column, right?
Yes.
That's where I find my opening balance. So just note that if my opening balance is under trade and other receivables, I'm going to have so if it's under trade and other receivables, I'm going to debit.
You debit. Yes.
But if my opening balance is under trade and other payables,
We credit.
we credit. Right?
Yeah.
Are you still with me? Now we go to
Yes.
my closing balance. Now my closing balance is going to be opposite. If it's under trade and other receivables,
Receivable. Credit.
what are we going to do? We're going to credit it. And if it's under payables,
We debit.
we're going to debit it.
Yes.
Now, with that in mind, we're going to do a T account. I think you already know by the debit and credits, right? That we're going to do a T account.
Yes.
Now, just note that your bank is going to be on the debit side and your income tax. I'm just looking for space here to write. Is going to be on my credit side.
Credit.
So these two don't change. My bank, I'm always going to debit it. Income tax, I'm going to credit it. But my opening balance and my closing balance always is dependent on whether they're under trade and other receivables or trade and other payables.
Yep.
Are you with me? So now
Yes.
let's do our T account, right? I'm going to T all of this. So we're going to start with my T account. So this is my SARS
SARS.
income tax. We can just have that in brackets. Right? So we're going to start with my opening balance. So where is my opening balance? Is it under my trade and other debtors? Sorry, trade and other receivables or trade and other payables?
Trade and other receivable.
Trade and other receivables, right? It's this 48,000 here, 48,500, right?
Yes.
So what does that mean? Does that mean I'm going to debit or credit my opening balance? We're going to debit it, right? So I'm going to say my balance
8,000 because it's a bank.
brought down, yes, of 48,500. Oh, I'm so sorry.
Balance.
Brought down of 48,500, right?
Yes.
Yes. And then I said my bank is always,
Debited.
so I write it. I debit my bank.
Mm,
And what did I say about my income tax?
you always credit.
I always credit it. And what? So I go to my income statement to look for my income tax, right?
Right.
Wait. Let's pause there. Let's go back to my bank. So with bank, this is the amount that I'm looking for. This one here. Because I'm trying to figure out how much I paid to my SARS account. Are you with me?
Yes.
So remember we started by balancing my opening
Balance.
balance, right? Which was 48,500.
500.
And now I take my bank and I also debit it, but I leave this space open because that's the amount I'm looking for. Are you still with me?
Yes.
And then I take my income tax and I credit it. And the amount for income tax I always find in my income statement. So it's this one out right there, the 306,000. Do you see it?
105. Yeah.
Yes.
106,105.
And then what did I say about my closing balance? Wait, where is it? Where is my closing balance? My SARS income tax closing balance. Is it under receivables or payables?
Under payables. Is it
Under payables, yes.
under
Do you see it
payables?
there?
Yes.
The 69,000. So what am I going to do with it if it's under payables? My closing balance.
Are you going to subtract?
We're going to debit it because remember I said with closing balance is the opposite.
Mm.
Do you remember that? I said with my opening balance, if it's under trade and other receivables, I debit it. And if it's under trade and other payables, I credit it
Credit.
with my opening balance. But with my closing balance, I said it's the exact opposite. If it's under payables, I debit it.
You debit in
And if it's under credit,
receivables.
and if it's under receivables, I
You
credit it, right?
Yes.
So what am I going to do with it now?
You are going to debit.
I'm
Is
going to debit it. So I'm going to say balance carried
But
over.
is it?
Oh, yeah.
Okay.
Yes, carried
No,
over.
it's a-
That's my balance carried over.
Oops.
And then I have my total here. So what's my balance carried over? It's 69,000, right?
Yes, 69,000.
Yes. So now how do I calculate this bank here?
You're gonna say. Then you're gonna say. Let me do this. No, 69,000. 306,105 minus 69,000.
Say that again.
306,105 minus 69,000.
Yes. And
It will give us 237,105, which is we recording in the bank.
wait, but don't forget to minus your 48,500 as well. So remember, I'm going to take this 48,500 plus my 69,000, and then that amount I subtract for my 306, because remember that here I'm supposed to have 306,105 and this side as well.
Okay.
Do you get it?
So
So
yes,
I'm going to take, oh, it's supposed to be a 6. I'm going to take this amount at the bottom, subtract it by that and that to get my bank.
Let me do this. So the 105 minus 69,000 minus 48,500. 188,605.
Yes, 188,605. And that's the amount I'm looking for. That's my income tax paid. So did you see what I did? I started with my opening balance, right?
Yes.
And then you determine whether I'm going to debit or credit it. And this time I debited it, right? And then I went to my bank. And what do I do with my bank? I always debit it.
Debit.
And then my income tax, I always credit it. And then I go to my closing balance, and then I determine whether I credit it or debit it. If it's under tax and other receivables, I credit it. But if it's under tax and other payables, I debit it.
Debit.
Yes. Did you note that down? Are you with me? And remember, you take your income tax from your income statement. And then your opening and closing balances, you always get from your balance sheet, right?
Balance sheet. Yes.
Yes. So we take this 188,605 to our cash flow statement there. Do you see it?
Yes.
Yes. So now we are basically done with my cash effects on operating activities, right? Yes. So I'm going to take my cash generated from operations minus my interest paid, minus my dividends paid, minus my income tax paid, and then that's going to give me that total here.
105 minus 621,700.
Yes. Do you see it up there?
Yes.
So now we've done our first part of our calculations. Are you with me? Are you happy there? Do you have any questions that you want to ask?
Nope.
You good? Okay, great. Now let's go back. So we're done with this one, right?
Yes.
Operating activities. So now we go to cash flow from investing activities. Now this is my assets. It's either I'm buying or selling my tangible assets, and then I have my fixed deposit. So my inflows are going to be my sales on assets or my fixed deposit maturing. And then my outflows are going to be me replacing my tangible or fixed assets or buying new assets. This one here, yes, at the bottom. So now let's look at it in this activity we are doing. Let's go to our balance sheet. So here, can you see that we have fixed and tangible assets there?
Yes, at the balance sheet.
At the balance sheet, right?
Mm.
And then let's look, do we have anything else? I don't think so. I think that's the only one. And then let's go to my additional information and see if it says anything on my fixed assets. Oh, yes, it does.
Yes.
Yeah.
Note number 5.
Yes. So what does it say? It says that I sold
the land and building.
Yes, for 1,250,000, right?
Yes.
And what happens when I sell something? Does my bank become more or less?
It becomes more because you sell.
Yes, that means I'm getting money in. So I know that I'm going to add that, right?
Yes.
And then I go to my equipment was purchased for cash. What happens when I purchase equipment?
You purchase equipment. Yeah, your bank is going to decrease because you're
My
buying.
bank is going to decrease. Perfect. And then the last one says no other tangible or fixed assets were bought or sold, right? So remember that
So
under
what about,
cash,
can I ask, what about
yes,
the one that says no other tangible or fixed assets were bought or sold?
that means
Um,
that's it. I only have two things that I have to worry about, which is my land and building, which I sold for 1,250,000, and my equipment.
Okay.
So that just tells me this third note here just tells me that I don't have any other entries to worry about, that I must just focus on the two.
Okay.
Are you with me?
Yes.
So remember, we said under my investing activities. So the first activities we did was operating activities, remember? Yeah, we did operating activities, this first one, right?
Yes.
And my second one is investing activities. And under investing activities, I have two entries, which is my purchase of
Purchase of
fixed assets,
and the
yes,
proceeds.
and the proceeds of my fixed assets, right?
Yes.
So what happens? Remember, I have an asset here that I'm working with, right? So remember that an asset on its own is money. We count it as money for the company. Do you agree with me there?
Yes.
So now with this money that I have, well, with this asset that I have, right? I use money to buy it. And when I buy it, my money becomes less, right?
Yes.
And if I sell it, my money becomes more.
More.
Yes. So here with the proceeds is when I sell it. So it's when my money becomes more.
More.
But with my purchases is
When
when my
you
money
buy
becomes less, right?
less. Yes.
And what did I purchase here? I purchased equipment. But the thing about the equipment is they didn't tell me how much the equipment cost. Did you see that?
Nope.
Let's go and see it. Here. They just said equipment was purchased on cash.
Purchased for cash. Yes.
But they didn't say how much my equipment cost.
Yes, they didn't add the amount. Yeah.
They didn't add the amount, right? You see that now.
Yes.
Okay. So I'm going to take my opening balance. I'm here now by my balance sheet. So now I want to know how much that equipment cost. That's the first thing I'm trying to work out. My purchase on my fixed assets, right? Are you with
Yes.
me?
Yes.
So to figure out how much this equipment cost, I'm going to start with my opening balance on my fixed or tangible assets, which is my
3,824,000.
yes,
500.
500. And then with this amount, I'm going to minus what I sold. Now remember it said that I sold, I think 1,250,000.
250,000.
Of my land and building, right?
Yes.
So I'm going to take this opening balance of mine and I'm going to minus this amount, right? And then I'm going to take my closing balance and also minus it. So my 2,790,000. And then after doing that, I'm going to also minus my depreciation
Minus
of
depreciation.
203,000.
3,000.
So to
Yeah.
calculate my purchase on fixed assets, what do? I take my opening balance minus my sold fixed thingy or tangible asset, and then I minus my closing balance, and then I minus my depreciation.
Okay.
So So what's the final amount? What did you get?
Oh my God. In brackets, 418,500.
Yes, I like the fact that you started with in brackets. 418,500, right?
Perfect. Yes.
Yes. So this is my purchase of fixed assets. This is my
Yes.
equipment that I purchased it. It becomes less. And then don't forget to add your fixed assets that you sold, right? Your sale on fixed assets. Now let's go to our, oh, sorry, there. My investing activities, right? So I've got my purchase of fixed assets. It's my 418,500 in brackets. You see it there.
Yes.
And then I have my sales on my fixed assets, which is my 1,250,000. This one is not in brackets because remember, when you sell it, your bank becomes more.
More.
Yes. And then I take this 1,250,000 and I subtract 418,500 from it. What do you get?
Wait, can I do it? 1,250,000 minus 1,500. 839,500.
Yes, 831,500, right?
Yes.
Now you take that 831,000. Wait a bit. Where am I now? Oh, sorry.
Mm,
So after that 81, that calculating my 831,500, this is my investing activities, right? So that means
Yeah.
that I've done my operating activities, I've done my investing activities,
Investing
and
of
then what's
which-
left? I'm left
The
with my financing.
It's
Now let's go see what financing entails. Oh, sorry. It's this last one here. So we've done one, we've done two. Now my financing activities, it's from obtaining financing and paying off loans or issuing shares.
shares.
So it's my loans and my shares. So my inflow is when I issue my shares or obtain loans. And then my outflow here is when I repay my loans. Yes. So my financing activity. So remember that my operating activities was my sales, my inventories, expenses, tax, and dividends.
Dividends.
Yes. And then my investing activities was my assets. My assets sold,
The
or
buying
my assets, yes, or me buying assets. Now, the last one that we're doing is financing activities, which is my loans and my shares, right?
Yes.
Now let's go to the activity. So in the activity, I see here on top that so I'm going to include my share premium amount and, wait, let me just make sure. And my repayment of loans. So I'm going to go to my loan and to my shares. So the first thing I'm going to start with is my shares.
The share
my
premium.
share, or my share premium. So what happened to my share premium? Did it increase or did it decrease?
It increased.
It increased. So that means I issued more shares. And when you issue shares, they buy shares from you, right? So that means
Yeah.
money is coming in.
Yes.
So do you put it in brackets or not?
You are not.
You're not going to put it in brackets, right?
Yeah.
So you're going to say 1,400 minus the 916,500, and what do you get?
Wait, can I do it? 400 minus 916,500. $396,900.
396,000.
900.
Mm-hmm.
900.
Yes, sorry, I'm just missing something. I just want to see what we missed. It's your share premium and your ordinary share capital. I think you should add them both. Yes, please do that. Take these two amounts and add them, and then subtract these two amounts,
Okay.
and let me know what you get.
Plus 1313 400 minus I got 963,900.
Yes, that's the one I'm looking for. So don't forget to include your ordinary share capital like I just did now. So it's your
Okay.
ordinary share capital and your share premium
So okay, ordinary share capital.
and
Do
your
we
share premium.
okay.
Yes. No, you don't include your retained income.
All right.
So it's just these two. Your ordinary share capital plus your share premium gives you your proceeds of issue of shares. So it's the shares you issued. Are you with me?
Yes.
So what was the amount there? It was 963,900. No brackets, right?
Yes, there's no bracket.
Now let's look. No, there's no brackets.
Yes, I said there's no bracket.
Oh, okay. Okay, sorry. Now let's look at our loan. So our loan went from 850 to 500. So what happened to it?
It decreased.
So are we going to put the amount in brackets or not?
We're gonna put it in the bracket.
Why are we going to put it in the bracket?
Because it was an outflow. So
Yes, it was an outflow of money, right?
yes,
So we're going to say 850 minus 500. What do you get?
115,000 minus 500,000. It's 350,000.
350,000,
Yes.
right? So you're going to take your proceeds of your shares issued and you're going to minus your payment to long-term loan. And then what do you get when you do that?
900 minus 613,900.
Yes, 613,900. And this is your financing activities, right?
Yes.
Yes. So now we go to our cash flow statement and we put that amount there. So do you see the 613,900?
Yes.
Now, after doing all of that, we take our three amounts, our operating activities, our investing activities, and our financing activities, and we add them. So we're going to say 621,700 plus 831,500, and this last one here that we just did, which is 613,900.
613,900.
Mm-hmm.
It's 2,067,100.
100, right? Which is this amount right there. This,
The net
do you see it?
change in cash equivalent.
Yes, that's your net change in cash equivalent. Now, what are we missing? We're missing our cash equivalent of the beginning of the year and our cash equivalent at the end of the year. Now, you go to your balance sheet and see which one you have, because they're probably not going to give you both.
Yeah.
It's either they're going to give you the beginning one and then you have to calculate the end, or it's either they're going to give you the end and then you have to calculate the beginning. So let's quickly see what we're gonna go.
Can you please repeat
So now we go to our,
again?
with
Can
our
you
cash
please go
equivalent.
back? Yes, I got distracted from something. Sorry.
Oh no, sorry, it's okay. So after getting our net change in cash equivalent, right? And how do we
Yes.
get our, wait, let's start there. How do we get our net change in cash equivalent? We take our operating activities plus our investing activities.
Plus our financing activities. Then it's gonna give us the
Yes.
cash equivalent.
Yes. And then after that, it's either they are going to give you the beginning cash equivalent or the end cash equivalent at the end of the year.
Okay.
So if they give you the end, then you have to work out the beginning. But if they give you the beginning, then you have to work out the end.
Then if
Are
they
you
don't,
with me?
then if they don't give you both, what are you gonna
No, I
do?
don't think they'd ever do that to you. I don't think they'd ever do that to you.
Oh,
Normally,
okay.
what they do though is give you the beginning.
Okay.
Okay, cool. So let's go to our balance sheet quickly. So here's my cash and cash equivalent, right?
Yes.
So I'm going to see what I have. My cash and cash equivalent here is 3,000. And under 2011, it's this amount right here. It's 1,100,000 and yes.
55,000.
So what I'm going to assume is that they didn't give me my beginning because this is too less. This is like, do you understand?
Yes.
Yes, because it's 3,000.
It's 3,000.
There's no way it's going to be 3,000. So I'm going to assume that I have my end.
Okay.
So I take that amount right there, the 1,155,000, and I put it at my cash equivalent end of the year.
Yes.
And then I work my way up. So what do I do? I
I'm
take the
gonna
one.
say 2,067,100 minus 1,155,000.
Yes.
Then it's
Yes,
gonna
and I
give
think it
you,
should. I don't know. Check, what does it give you? If it doesn't
yeah,
give you, then we made a mistake.
let me check. 155. It gives me 912,100.
Yes,
correct.
there you go. Then you have that at the beginning of the year. So if they don't give you the one at the end, but they give you the beginning of the year, then you know that I'm going to subtract that amount and I'm going to get my end of the year.
Yes.
Are you with me?
So the beginning we always bracket it.
Yes, the beginning we always minus it. That's my opening balance. My opening balance, we always minus it from my net change.
Okay.
And that brings us to the end of our session today.
Thank you, Smith.
You're welcome. Don't leave yet. Don't leave yet. Do you have any questions that you'd like to ask before we go?
Nah, so far I'm good.
So far you're good. Okay,
Yeah.
I'm glad. Okay, I'm going to hand over to Surprise, I think. And then, yeah, she'll let you know everything else.
Oh, it's suddenly Siwe.
Oh, suddenly Siwe, sorry.
Thank you so much.
Can you please repeat?
Repeat my name.
Thank you so much.
Oh, thank you so much for joining.
Hello.
So for the session we're doing. I think that another session will be on the 18th, right?
Yes, the next session will be on the 18th. We're doing reconciliations. Yes.
Okay, same time.
Okay.
Yes, same time.
Okay, thank you so much.
Because thank you so much. Because
no, you're welcome.
I'll be starting writing my prep on the 30th of August, and I'll be starting with accounting paper 1.
Oh, okay. No,
Yeah.
then we'll be done by then. We'll do, we'll meet again on Wednesday, same time.
Okay. Thank you.
Okay. No, you're welcome.
You can.
Bye.
Thank you, guys. Thank you. Enjoy your day.
Thank you.
Bye.
You too.
Thank you. Bye.
Bye.